If you've been neglecting to file income taxes that you might owe from your online sales, those days of flying under the radar might be quickly coming to an end. Hey, my name is Mark too, and I'm a CPA and fellow reseller who specializes in helping resellers and online businesses with taxes and with growing their businesses profitably. And today I want to talk about the new $600 1099 threshold and how that affects you as an online seller and small business owner. And I'm not talking about the 1099 NEC, which stands for non-employee compensation, and prior to 2020 was the 1099 MIS or miscellaneous. We're not talking about that form. That's the one you're supposed to send your independent contractors when you pay them at least $600 during the year. I'm talking about the 1099K and the updated threshold starting in 2022. If you've ever had sales during the year of at least $20,000 on any given platform and at least 200 transactions, then you have likely received a Form 1099K. These are forms that the IRS requires your payment processors to send you if you surpass certain thresholds. Historically, the threshold was $20,000 and 200 transactions. So if you had at least that level of sales activity that went through PayPal, let's say, then PayPal was required to send you a 1099K showing the total dollar amount processed during the year. But they don't just send that information to you, they are also sending it to the IRS. There are still hundreds of thousands, if not millions of people who aren't including their online selling activity on their taxes. Some don't know they're supposed to, others just procrastinate or don't know how to go about it. But when the IRS receives a record of your online selling income, and then they don't see that income reported on your tax return, they'll send you a letter with an updated tax bill. So let's say you had $25,000 of sales on eBay this year, but you didn't include that on your tax return. The IRS will see that you didn't report the $25,000 on your tax return, and they'll send you a tax bill for about an additional $4,000 to $8,000 depending on your income tax rate. That's usually more than enough to put someone into a tailspin, and that's when they send me a frantic email asking for direction. The problem with this is that the IRS is not factoring in any of the deductions that you're entitled to. So typically what I'll do is help the person amend their tax return to include not only the $25,000 in sales that the IRS expected to see, but also all of the business deductions that they were entitled to. So after deducting expenses such as cost of goods sold, supplies, subscriptions, travel, mileage, and so on, it could be that the taxable profit ends up being more like $5,000, in which case they could end up owing less than $1,000, which is much less than the IRS showed. Or in some cases, their expenses could actually exceed their income to create a loss, and they could even receive a refund. So that's what happens when you don't report your income and the IRS has a record of it. But what if you're below that $20,000 threshold and you don't get a 1099K? You don't have to report that income, right? Wrong. This is an all too common misconception. The IRS might not have a record of it, but that doesn't mean that you don't have to report it. You do typically still need to include your business activity on your tax return, even if your income is below that 1099 threshold. Millions of people fall below the threshold, and many of them are not reporting their business income. And since the government has been spending a ton of money lately for coronavirus relief and stimulus efforts, they have to look for creative new ways to fund that increased spending. Do you know where this is going? As part of the American Rescue Plan Act of 2021, the 1099K threshold was reduced from $20,000 and 200 transactions to just $600, regardless of the number of transactions. So if you've always reported your online sales activity, whether or not you received a 1099K, this won't change anything for you. If you haven't reported your sales activity in the past because you haven't received a 1099K, you won't likely be able to continue to hide or at least go unnoticed beyond 2022. There are a lot of people who are in for a major wake-up call. Resellers in Vermont and Massachusetts have been dealing with this for the last few years because they already adopted the $600 threshold at the state level. So I'm sure people in those states feel a bit better knowing that we're all in this together now. One other thing to remember is that the amount listed on your 1099K is not necessarily your actual sales number. The total shown often includes any sales tax collected, and any refunds you send to customers are typically not subtracted out. So if you aren't accounting for those things on your tax return, you're likely paying too much tax. Typically what you'll want to do is make sure you're reporting your gross income on your taxes that's at least as much as the 1099K number, and then deduct the necessary amounts to make your tax return consistent with your own records. And I can talk more about that in another video. So make sure you're keeping good records. I always trust my records more than what's shown on the 1099s, and I'm working on a beginning bookkeeping for resellers course that I hope to launch within a few months, so you can click below to get on my waiting list or enroll depending on when you watch this video. If you have questions, post them below or come post them in the Accounting for Online Sellers Facebook group. Be sure to subscribe for more videos where I'll talk more about how to get your taxes and accounting on track in your reselling business. Check out @NotYourDadCPA on Instagram for more tips and behind the scenes. The links below will help you find more resources to optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.